So thanks for signing up, everyone. This is our webinar on why we're both. My name's Alex. Kyle are purchasing condos in Calgary, even though we live in Toronto. So we'll just follow up with some background on yourself. So Alex Wilson, owner and broker record of remaxwealthbuilers real estate. Been selling real estate for over 11 years in Toronto. Number one Remax agent in Ontario for individual transactions, 2019. 2020 stats aren't out yet. Number 25 Remax agent in Canada, number 30 Remax agent worldwide. Been inducted in the Remax Hall of Fame and awarded the Remax Lifetime Achievement Award at 35, currently 39. But none of that has any relevance to what we're talking about today. The next point does, and that's where in 2012, both myself and Kyle purchased our first investment condos. Deposits were roughly $39,000, and I've since turned that into a portfolio of $14 million of real estate value, which includes 14 condos, High Park triplex, and an apartment building in Hamilton. And of those condos, 2 of them are now in Calgary and continuing to expand on those. And we'll elaborate more in the presentation. I'll let Kyle introduce himself.
Yeah, thanks, Alex. So licensed real estate here in the province of Ontario. As Alex mentioned, I've been investing in real estate since 2012 as well. And I'm now an owner of 6 properties throughout Canada. I had previously managed Lotto 649 and Lotto Max draws nationally. So the actual ball draws, I was actually responsible for that. But a couple of years ago, I left that field to found Remax Wealth Builders Real Estate with Alex to really help people invest in their future, to be able to build retirement funds through real estate, not gambling on their future via.
I'm laughing because you literally came from a gambling field, and for those that don't know, Kyle before this worked for an online poker software company. So he saw the other side of it, and
the stats even though on lottery were pretty amazing because they did surveys of, I think it was 1,000 people, and a crazy number, like 40% of them were actually depending on winning the lottery for their retirement savings. Like, that's crazy.
That's what we're teaching people not to rely. And even we're teaching people not even to rely on their pensions. I don't want to get too sidetracked here on this, but we've said in other videos, you can't, unless you have a government pension, you cannot rely on your pension being there at some point in the future. Look at these massive companies that Kyle and I are both the same age, both went to high school together. So in the 80s, these behemoth companies. You remember when we get the Sears catalog, Kyle? I love the Sears catalog at Christmas time. The Wish Book, I think it was called the Wish Book. Yeah. You go through and you're looking through the magazine, that company doesn't exist in Canada anymore. It's gone. And so are the pensions, or a part of the pensions that were with that company, because those are not the secured debt holders when these companies go under. Nortel, when we went to university in the early 2000s, massive in the early 2000s when we played our stock market games, part of our business courses, massive. Nortel doesn't exist anymore. And even when we had the original financial crisis, and I found this interesting, I didn't realize this, there were concessions made by the pension holders of the auto manufacturers to get them through to survive the financial crisis. And those, I know specifically in GM, I can't talk about all of them, but I was reading specifically about GM, those have not been replaced. So they had to agree to concessions to allow these auto companies to survive. So what they had originally planned on retirement for their defined benefit pension plans, they had to reduce that. So you can't rely on your pension in the future. You got to take control of your own security, which flows in great. And it was kind of ad-lib there. It wasn't planned for the presentation, that little segue, but it does go well into this. So when we take the first 5 minutes and we talk about why we're doing this, real estate investing in general. So very transparent. Here's my whole portfolio. This is everything I own. And I look at what it's going to be worth in 30 years. If you watched it in my videos previously, I've done this before. So we look at it. Okay, what's my portfolio in 30 years? Compounded at a 3% annual growth rate. Very conservative. 30 years worth $36 million. And why 30 years? My mortgages are all going to be paid off. That means all the tenants in all these properties pay down all the mortgages without me putting any more money in, and I'm left with $36 million at the end of it. Long and boring is what we like to say. Let me just go to my page. And if you're in this for instant gratification, real estate doesn't provide instant gratification, but it does provide the ability to generate substantial wealth. And that's what we just showed there. Now, because my background's in economics and finance, I'm like, well, there's inflation. So $36 million isn't really $36 million in the future. What is that worth in today's dollars? How can we translate that? What's going to be my purchasing power? So that really translates to $20 million, nearly $21 million. So I'll have $21 million worth of purchasing power in 30 years. And then this is where we put the pension fund hat on. I said, well, what can I live off of? The nicest for $21 million, but how can I live off of this? So I applied a very conservative 5% return on investment. So 5% return per year on that 21 million. That'll give me over $1 million in annual income that I can spend before tax. And I want to reinvest 2% of that to protect against inflation. So I'll always have that money secure. So that gives me $624,000 a year to live off of. I built my own pension fund. It was mind blowing when I went down this example. And the whole thing is to show you with the slide is that small actions can generate you wealth in the future. So again, you may think, okay, well, I don't have a $36 million portfolio. I don't have 14 properties, Alex. 16 properties, 14 condos, everything like that. It's unrealistic, but it's not. I'm from a small town in Northern Ontario. Kyle's from the big city of Sudbury. I had to get bussed into Sudbury to go to high school. And we're just regular people. You can do this. So we made this slide to show you can. So let's say you have a $1 million portfolio in real estate is 100% achievable. You can do that. So if you have $1 million real estate portfolio today, that is going to give you an inflation adjusted $70,000 payout in 30 years. And when you hedge it for inflation, $42,000 payout every year at 5% growth. And then you start compounding, you start leveraging properties, and that's how you grow your portfolio. You turn 1 into 3 and they continue to grow. That's exactly what we did. You got to come up with the initial capital, but then you start growing your portfolio as those properties go up in value. So you can 100% do this. This is not hard. Simple. And that's how we get into Calgary. So when we bought in 2012, we bought condos in both in the same building at Gladstone and Queen, which is in West Queen West in Toronto. And they're both in the mid 200s purchase prices. Our deposits seem quite low. Again, they're $39,000 roughly for both of us. I can't do that. I can't do that anymore in the GTA. That's not possible. I can't even do that in Southern Ontario. It's not possible. So where can I do that? Where can I have a small pot of capital to start and grow my portfolio? And that's where Calgary came around. Now, 2019 is when we started looking Calgary, investing in Calgary, and we started doing a research into Calgary. So this is basically our research, which we did before we put our money there, and now we share it with everyone. So first of all, when Calgary came across my plate, I'm like, well, why Calgary? Well, going in the details, number 1 most livable city in North America, the last 2 consecutive years, 4th most livable city in the world. I had no idea. These are things I did not know about Calgary, because we just read in the headlines, negative, bad, negative, bad, negative, bad. This is the deep dive beyond the headlines. Top 5 of the Economist Intelligent Units Global Livability Index. Things I do know, it is located in the foothills of the Canadian Rockies. Tons of green space in Calgary. And I didn't know this, but it makes sense. It has the lowest cost of living of Canadian cities. Sorry, 2nd lowest cost of living in the Canadian cities and 9th lowest in North America. It's incredibly affordable. And then 2,300 sun-filled hours, sunniest city in Canada. Again, extensive pathways for biking, and ranked the 2nd for healthiest lifestyle. I bought into all of this before COVID. Then COVID hit. And when you read these slides, it really hammers things down. We look at the exodus from Toronto. Now, it's not going to last. Toronto with downtown will rebound. But there are people that are looking, well, why do I need to live where I live? Can I live somewhere else where I can have a greater satisfaction of life? And that's the real conversation people are having. This summer, I was talking to one of my clients who's a senior executive for one of the pension plans. And I just ran my thoughts by him. And he's like, well, actually, we just hired a whole bunch of people. And normally they would be Toronto-based people, but they're actually in Calgary-based. And that's where they're working. So the employers are thinking differently about where certain individuals will have to work. And those individuals are looking at, well, where can I live? Well, number one city in North America for living, second lowest cost of living in Canada, ninth lowest in North America. This really puts Calgary on the map for a lifestyle perspective. And then just outside of the city, one of the big things from a lifestyle, 5 world-class ski resorts within 2 hours, over 200 hiking trails in Banff National Park. And it's literally just a 1.5 hour drive to Banff National Park. And that is a 1.5 hour drive. If I were to say, hey, this summer you want to go to Muskoka, to do it in 2 hours, you would have to leave at 4 a.m. That doesn't exist in Calgary. You can leave at a reasonable time. You don't need to plan and go. There's going to be how much traffic and get there in 1.5 hours. So you're on the footsteps of a world-renowned national park. And Banff, if you've ever been, is absolutely incredible. The scenes in Lake Louise are just to die for. It's incredible. So that's your backyard. So, well, again, Kyle, I gotta fix this slide. Is this the old presentation? No, or is this the new one, Kyle? I don't think I have the pretty one up.
No.
I don't have the pretty one. No, but we had your slide in there.
No, so that's right. Yeah, that's right.
Yeah, this is the pretty one. Okay. So yeah, we got to adjust that. Why is Kyle and Alex buying in Calgary? So anyways, the population. So you got to realize we are in the business of selling roofs over heads. So we have to look at what's going on with the population. So we have net population growth in Calgary of 10,000 people per year. It's actually greater than number. So we know in the past and present that Calgary has a positive population growth. From a money perspective, Calgary has the highest per capita millionaires in all the major Canadian cities. They're the most millionaires per capita in Calgary. And also from a wage perspective, Calgary has the highest wages and salaries per employee in the country at $66,000. So they have positive population growth and they have money. So these are two important things as we invest in roofs over people's heads, because that's what we're investing in. We want to see the population growing, and we want to make sure there's the income to support the price growth or the rental rates on these properties, which it checks both those boxes. Now we want to look into the future. Well, where is Alberta going in the future? Where's Calgary going in the future? Well, Alberta is set to lead in the population growth rate in Canada, 48% over the next 22 years, 43% over the next 22 years, versus Ontario, which is only set to increase by 24%. 24% is still a good increase, but it's going to be double the growth rate of Ontario. And one of the crazy numbers when I was looking at this, so again, my background's in economics, so I look at the numbers and just looking at when I looked at British Columbia and Alberta, and I looked at it in 2020, and then I looked at it to 22 years from now, the actual net swing is 1 million people. So there'll be 1 million more people in Alberta than there is in BC today. Sorry, I shouldn't say the net swing of people is the net swing is 1 million people for Alberta, bigger than BC. It's currently smaller than BC right now. So I know that moving into the future, there will be more people in the population. It will have the highest growth rate. So it'll need the greatest percentage of new homes to be created in Canada. So because we're investing in the roofs over their heads, we're always looking towards the future. What's going to be the upside here? And where's the money? Well, we follow the population growth. Now we're following the money. Calgary GDP for cities is the 4th largest in Canada. Probably guess what the top 3 are: Toronto, Vancouver, Montreal. Calgary's number 4. Its GDP economic output is greater than the GDP of Saskatchewan. It's greater than the GDP of Manitoba. So there is significant economic activity happening in Calgary. So speaking of following money, Minto is the builder that we work with when we're dealing with Calgary. And why we work with Minto is actually Ontario-based, started in Ottawa, then moved into Toronto and the Greater Toronto area, does work in South Florida, been around for 60 plus years, have built over 80,000 homes. I know their financial backing is secured. I know the quality that they're making. And also they are now establishing a presence in Calgary, and they care about their brand significantly. So if they're going into a new territory, they want to make sure that they leave a great reputation for being a builder, because they want to expand the brand in Calgary. And when I look at it, they have 1,100 employees at Minto. They're just myself and Kyle. So we do our due diligence, we do our research, which we're presenting today, but they also did their research with analysts, tons of analysts looking. They're publicly traded on the Toronto Stock Exchange. They're scrutinized. They saw value in Calgary. So there's a little bit of piggybacking off of them going, hey, if they see value in Calgary, I see value in Calgary, because they made significant investments there. On top of that, and in my past presentations, I said they had $2.9 billion of assets under management. I was just on their website today. It's actually $4.1 billion in asset management. So what that means is extremely secured from financial backing behind the company. They will build their product, and I know their product won't be canceled. I'm not worried about them going bankrupt. This is very important to me, being an individual that's sitting in Toronto and investing in another province. So buy low, sell high. That's how you make money. So when we look at buying low, selling high, I put this picture of Warren Buffett here, and specifically last year he invested in a pipeline. His mantra is to buy low and then sell high. So I put there because the mantra of buying low, Calgary has been a down market. New condo sales prices have dropped 21% since 2017. So I wanted to show that, but also we have one of the wealthiest people in the world now investing in oil and gas infrastructure. So one of the pillars of the Calgary economy, but not the only one, which again, we'll talk about a little more. So we're looking at investing in a down market. And then profiting off the future growth, and that's key. So we're looking at where are things down so we can profit on the upside. And when we talk about oil and gas, which there are two things in Calgary we're looking at for growth. We're looking at distribution and diversification. The distribution is on the oil and gas. So oil and gas, and they are two separate things, oil and gas. Oil and gas, you hear a lot of news about the price of oil, the worldwide price of oil going up and down. Whenever I put on AM 680 in the morning, one of the things they talk about where the Dow Jones is, where the TSX is, what the price of gold is, what the price of oil is. But that's actually not a true representation. So Alberta suffers from being landlocked with their oil. So they do require either rail or pipelines to actually get their oil out. So the issue with Calgary is that they basically have a sole. They're not the only supplier, not the only customer. Their biggest customers is the United States, because they can't easily get their oil to international markets. And at points in 2020, we saw Alberta oil selling for 50% less than Texas oil. Texas oil, the worldwide oil price here is actually the price here about the Texas Western Intermediate crude oil. But at points, Canadian oil or Alberta oil was selling for 50% less than that. But if you're able to improve the distribution of that oil, you don't need the worldwide price of oil to go up. You just need the price of your oil to go up. and to trade more in line with what the worldwide price of oil is. So we heard that the Keystone pipeline was canceled a few weeks ago. Zero relevance to anything that we're talking about. If you look back at all our old videos, I've never talked about Keystone once. Keystone has been canceled multiple times before in the past. And when it was actually canceled in 2015 originally, at that point, you had economic forces move things around. So there was other pipeline capacity being built to satisfy the demand in the United States. So the Keystone was just going to serve the United States, and our existing capacity to send oil to the United States is 4 million barrels of oil per year. And we actually hit record levels of imports to the US at 3.8 million barrels last year. And it's expected that the US will cap out about 4.2 to 4.4 million barrels by 2025. And with that other pipeline capacity being added in regards to existing structure, we will have the capacity to meet the US needs. There wasn't actually a need for the Keystone pipeline to improve Canadian oil prospects. The one that does is the Trans Mountain pipeline. The Trans Mountain pipeline that, as Canadians, anyone on this webinar, Kyle, myself, we all own, because the federal government purchased the Trans Mountain pipeline, which is currently under construction, which is going to triple capacity across to BC and then be exported to international markets. We're not relying on the US more. Now we're tapping into international markets, which is improving the distribution of our oil and improving the worldwide, the price of action that we're actually getting on that Alberta oil. And that Trans Mountain pipeline is scheduled to complete in 2023. It is a matter of strategic importance with our government as Canadians. You know, there's no other external government forces factoring into this. So this will happen. And that is great news for all of Canada. So I've always talked about Trans Mountain. I've never talked about Keystone. So we're getting the distribution that we need to help continue our oil sands and our oil and gas production to be a backbone of the Canadian Alberta economy. And you'll hear me use backbone again in very shortly. So we talk about distribution. Now let's talk about diversification. So the tech boom is actually already here in Calgary, and that's actually one of the news articles I got excited about. So excited about it because I made some predictions that I've been talking about in January, and this is what this news article is about. So it's always good when I see things come to fruition. But let's talk about the tech boom in Calgary. Calgary ranked in the global top 10 most attractive cities for workers. Calgary has the highest proportion of STEM graduates of major Canadian cities. These are the degrees that are needed for these tech workers. Degree programs in science, technology, engineering, mathematics. And the key point, low cost office space, 27% vacancy. Why is that relevant? That may seem like a bad stat. No, it's a great stat because we're buying low. So we're buying low, and it's the low cost office space that make it attractive for this tech boom that is coming. Well, that is here and that is going to continue to come into Calgary. Office space was built on $100 a barrel oil in the not the early 2000s, but getting into 2010, 2011, 2012, in and around there, it was $100 a barrel of oil. So you had all this construction coming into Calgary, and they built all these office towers. The problem is oil decreased, and then you had layoffs, you had companies seeking efficiencies. You didn't see growth in that sector anymore. So those jobs have already been cut. That already happened a while back. But because of that, you had this big buildup in all this office space based on $100 oil, which doesn't exist anymore. So what are you going to do? Well, you got to fill it with something. And that's going to set Calgary up to thrive. The backbone, oil and gas, built this office space. Now you have this new sector, the technology sector, that can come and fill this gap. So Calgary is home to 435 technology companies. 3/4 of these are startups, where if you're a startup, you're very sensitive to the costs related to operating your business. There are more than 2,000 open tech jobs in the city, and a record over 44,000 Calgarians are working in tech right now. They also have the youngest working force population in Canada. This again, set to boom in Calgary. So because of this excess office space, you have this low cost of business. So we looked at, well, what's the cost of office space in Calgary? Well, it's $17.50 per square foot. In Edmonton, it's 23% more, a government-based city. In Toronto, it's over 100% more. And in Vancouver, it's over 155% more. Calgary is the low-cost place to do business because they have this excess office capacity, and now they can offer affordable office space to these tech startups. And we give examples. So first of all, talking about the tech boom is here, Calgary is starting to be noticed. So they are getting, these startups are starting to come farther down the line in their life cycle. So now they're starting to get into some unicorns. So what a unicorn is a company that hits $1 billion valuation. So the latest company that hit unicorn status, tech company that hit unicorn status in Calgary is Benevity. It hit 1.1 billion. And if you look on this article, when was that? Well, that was December 4th, 2020. So that just happened. That is happening right now live as we speak. And that's not the only one. There are a few other unicorns that just happened very recently. You had Solium Capital was sold to Morgan Stanley in 2019 for 1.1 billion. And then you had Parvus Therapeutics, a San Francisco-based company, also bought that for over $1 billion recently in 2020. So now you have these startups that are turning into unicorns, which are getting these $1 billion valuations. So what happens at that point? And this is where it gets exciting. The spinoff, it puts Calgary on the map. More investors take notice of companies in the area. So I like to make a sporting reference at this point. If I'm some sort of major sports team and I'm always looking, what's my competitive advantage? Where can I find the best athletes at the most affordable cost that my other teams aren't going to find? So you look at the basketball players that came out in Canada in the not early 2000s, not mid 2000s, but 2015, 2016, we actually got some number one picks in the NBA draft. Whereas you didn't have any Canadian basketball players really before, other than like Steve Nash. You know, if you look at baseball again, we were really overlooked as a baseball destination, but then you have significant scouting facilities set up now in Canada because you started uncovering these great Canadian baseball players, Larry Walker and various individuals after that point. Now you're actually getting Canadians being drafted in the MLB draft. So the same things happens in the business world. So where can I find these opportunities? Where can I find my next venture? Where can I invest my venture money? So Calgary is now starting to be on the map. So we've already had a few $1 billion valuations. Other venture capitalists are going to start circling around Calgary. It's like, there seems to be some great opportunities in here. What can I invest in the city? Then on top of that, what you have is you have those investors, those founders that originally had their companies sold for $1 billion plus valuation. They're flush with capital. There's no one that knows the current market better than them. They reinvest back in the market because they need to reinvest their capital in. They know what their startup friends are doing, going, hey, there's still great opportunity in this market. I'm going to invest in this startup, and this startup. I know that they're doing good things. And now I have venture capital connections I can introduce them to. You start having a snowball effect. And we're seeing that happen in Calgary. So I take out this clip because it talks about that. It talks about not only because the founders and the shareholders, these companies now have the capital to reinvest, but because of their high profile nature, it'll help to open the eyes of others with deep pockets to see what's going on in the technology space in Calgary. So that's what's happening right now. You know, this was published in December 2020. So now we talked about, that's the success stories. Now we're talking about the startup companies that are actually leasing this downtown office space. So Cymed had fewer than 20 employees in the spring of 2019. Now they have more than 200 employees. They're moving to 79,000 square feet in downtown Calgary, and they need to hire 200 to 300 more people in 2021. Halcyon outgrew its original office space in the suburban areas of Calgary. they've gone from 3 staff to 68, and they plan to grow to 150 by the end of 2021. They just signed 20,000 square feet in downtown Calgary. LodgeLink will require 300 new technology-based jobs over the next 5 years in Calgary, and will require an additional 50,000 square feet of office space in Calgary. And on top of that, they'll require another 300 non-tech jobs in their space as well. So you see these companies that are starting, these startup companies that start small and start growing. And because the office space is affordable downtown, they're moving into that office space. And then what you're going to get is you're going to get a hub effect. You're going to get the multiple startups all in the same general area, which you have more services come to accommodate them, which then will lead to more clustering, which will lead to growth for everyone in that area. So it's not only just Canadian startups, it's international companies that are now recognizing Calgary as a great place to open up their shop. So CloudExa, it's ESQ's new Canadian subsidiary. They have offices in Silicon Valley, India, Mexico, Singapore, and the United Kingdom. They looked at various markets around Canada, and they sided with Calgary because of the environment, the low-cost environment, the youth workers that are available in that area. They opened their space right there. Now, how do I know that international companies are realizing value in Calgary? How do I know international companies are going to start moving into Calgary? Because it's already happened somewhere else. So if you think of my background, economics and finance, I look at numbers, I look at patterns. Where are the patterns? And you're seeing companies move from Silicon Valley to Texas. It's happening. Why are they moving from Silicon Valley to Texas? They're fleeing high taxes. Alberta has the lowest corporate tax rate in Canada. There's no land transfer taxes or development charges in Canada. In Alberta. There's no provincial sales tax in Alberta. Very similar to Texas, where Texas has no state income tax, very favorable tax regime, moving from a high tax regime in Calgary to the low tax regime in Texas. Okay. Expensive housing. Calgary housing, lowest cost of living, the second lowest cost of living out of all major Canadian cities, ninth in North America. So companies are leaving, again, California and moving to Texas because their employees just literally can't afford to live in California. This is where I bring Kyle in because his wife works for a San Francisco, California-based multinational pharmaceutical company. Why does your wife live and have a job in Canada?
Because it's a low-cost center compared to San Francisco. Ultimately, the employers can get a very highly skilled worker who actually works in a beneficial time zone that's between San Francisco or the West Coast and Europe. And they're able to perform the same jobs, but at a fraction of the price than having to pay someone in US dollars at a higher salary amount. So it's really win-win for the business.
Yeah, and we have that on the call. We have a prime example for that. And she's in charge of global regulation now, but originally she was in charge of US regulation. So she worked for a pharmaceutical company, and her direct job was to deal with the FDA in the US for approval and marketing of drugs, but she lived in Canada.
Yep.
So that just shows you, because it was more affordable for them to have that individual in Canada. So they're looking at the same thing in Texas now. Okay, I can move my company from California to Texas, and then my employees will have a better lifestyle there because they can actually afford to live here. They're not sleeping on a friend's couch because they can't afford the rent in San Francisco. In government regulations. So if we look at Alberta, they've recently made a $175 million commitment to the Alberta Enterprise Corp for Innovation. There's also no rent control in Calgary. These are positive things where you have the government involved that are not creating red tape, that are providing incentives for these companies to open up. And speaking of incentives, the lowest corporate tax rate in Canada is because there's a $10 billion stimulus package right now in Alberta that's already been initiated to help spur the economy back after COVID-19. And that has resulted in a reduction in the corporate tax rate. So talking about that exodus, who's been leaving? Well, HP, Hewlett Packard, they're moving operations. They're still going to maintain operations in these cities, but they're moving operations from California to Texas. Oracle, they're moving operations from California to Texas. Tesla, Elon Musk has already moved from California to Texas. Dropbox, the CEO, same thing, has left California to Texas. These are happening right now in real time. And this is where I get excited. Tech firm moves headquarters to Calgary from BC, another sign of the future growth. This is exactly what I was talking about in regards to companies that are looking to leave their current environments and move to a lower cost environment. Okay, so will Amazon leave Vancouver, Toronto? Will Microsoft leave Vancouver, Toronto? Those are always going to have a major presence in our centers. But our smaller companies, let's say our mid to small cap companies in a technology space, they're gonna leave because they're gonna seek out Calgary to have a competitive advantage against these large multinational players. So why would a small to mid cap company stay in Vancouver where it could have a cost benefit to operate in Calgary, so they have a huge savings on their bottom line, and their employees can potentially have a higher satisfaction of living because they actually afford to live there. So we're seeing it happening in real time in California to Texas. And this article, February 2nd, yesterday, it came across my desk. I'm like, yes. I was saying it all January, and look, it's happening. So that's where it is. I got so excited about this. I wanted to share that with everyone. So we'll just go back into the presentation. But that just shows you what we expect to happen. And now we actually have an example of that happening into Calgary.
And that's during the pandemic too, right? So they really have to believe in moving their headquarters.
Exactly. Yeah, 100%. Okay. So when we talk again, when we look at Alberta again, when we talk about pandemic, we talk about getting out of it. We talk about the $10 billion stimulus package. Well, you got to invest if you're going into new sectors in your economy. And if we look at where Alberta is, Alberta has the lowest net financial debt in Canada. Because of the backbone of oil and gas of all the number of years, Alberta has very, very little debt. So that means that they have the ability to spend, to invest in new areas, to bring in new tax revenue into the future. So you're going to see that debt number rapidly increase in Alberta, but there's nothing wrong with that because they're investing in the economy to get the return to do that. If you look at Ontario, we have one of the highest net financial burdens in Canada. That would limit your ability to invest in bringing in not new technologies, but investing in future industries. Now, am I worried about Ontario? No, I'm not worried about Ontario at all. It's where we live. We know the financial might of Ontario and its workers. But Alberta has the ability to spend now because of the backbone of oil and gas, which will always be there. There's still always oil and gas in there. It just may not be the leader in growth. There'll be other sectors that are leading, but you always have that revenue stream coming through that it's going to help. And then we look at the diversification that's moved away from oil and gas, where oil and gas is now 6.5% of the workforce population combined with their mining, fishing, forestry, and quarries. So you have a diversification. You have jobs that are happening in other areas in the Calgary landscape. So boom and bust. Calgary is historically a boom and bust. So we talked about buy low, sell high. We're buying low because we're coming just to the end of the bust market in Calgary. And we're expecting it to go up in the future. That's what Calgary has always historically been. It's been boom or bust. So we want to buy low, and we're seeing the signs of recovery in Calgary slowly. The fourth quarter of 2020 had the highest number of transactions in Calgary since 2014. And hot off the presses, we just had a record year in Calgary in January. So now we're starting to see the slow trajectory forward in regards to, okay, we're starting to see some opportunity in Calgary. This is going to lead to more roofs over heads, increases in real estate prices. And the landscape to invest is very pro-investor in Alberta. So when we look at our opportunities, you're able to buy with only 5% down, initially buy with only 5% down, secure these investments. We have assignment clauses in our pre-construction properties. There's 2-year rental guarantees, including full property management with these properties. Every single unit is cash flow positive. There's no development charges or other closing costs, which are huge in Ontario, and specifically in Toronto, where we have double land transfer tax. That cost doesn't exist. And the development charge, which are pass-through costs by municipalities, that doesn't exist in Alberta. Your only closing costs are your legal fees, which is incredible. And as I mentioned, all the units are cash flow positive with the rental guarantees. So these are things I can't do in Ontario, and that's what led us to start buying in Calgary. And when we started looking at numbers, and these are the specific units that I personally bought, the unit I bought at Era, which is a Bridgeland prime downtown location. The price for that one with the GST was just under $90,000 for a 2-bedroom with parking. When I factored in the mortgage, property tax, maintenance fee, and the lease back rent, I was cash flow positive $265 per month. Now, how the lease back works is you take the purchase price, you multiply it by 6%, that's the lease back rate, and then you divide it by 12, and that equals $1,855. So that's how they calculate the lease back. So the builder will lease back the unit from you from that set with that set fee, and it includes full property management as well. And then the unit that I bought at East Hills, Kyle and I both bought in East Hills. This is more of a suburban location, the southeast side of Calgary. $270,000, a 2-bedroom with parking and locker. The lease back on that, there's actually, Kyle and I debated this. There's actually an error in there. It's only 6%. It's not 6.5%. So these numbers are going to be a little bit off. But it also was over $100 cash flow positive here in this development as well. So here I get these very, very low entry points to get into these properties, and I get 2 years of rental guarantees with them. So I get 5 years from build to the end of the rental guarantee for these properties to go up in value to get into that boom category. And when I look at it, I'm just initially committing 5% down. I'll expect my returns to be greater than this, but if my property only goes up 5%, and my deposit is only 5%, and my property goes up $20,000, I've over doubled my investment in Era. If my property only goes up $15,000 in East Hills Crossing, I've over doubled my initial investment. It doesn't take a lot for my initial investments to grow significantly. Again, I expect these numbers to grow higher than this, but because I'm only putting 5% down to get 100% return on my initial investment, I don't need much at all, because that's the beauty of leverage in these properties. So policy pro-investment, no rent control, no foreign buyer tax, no land transfer tax, no provincial sales tax, no development charges, and you have a $10 billion stimulus package, including reducing corporate taxes here in Alberta. So a very favorable environment to be investing in. And it's been evident in projects that we've done. So Era, which sold out in 2019, 180 units. Annex sold out the initial investor release over 2 months this summer. And then East Hills Crossing, the most recent launch, sold 87 units in 2 weeks in November. So a very favorable environment, and investors are taking notice and are interested in these developments. So we'll open the floor to any questions that anyone may have. You can ask those questions on the Q&A. As well, this presentation has been recorded, and a recap will be sent to everyone over the next day or so, so that you can watch this and ask any questions you may have after you reviewed it potentially. So I'll stop share, and I'll take a look to see if we have any questions on the board.
Nothing yet.
Doesn't look like we have any questions, but again, this has been fully recorded. You'll be sent a recap, and then if you do have any questions, you can reply to the email, or you can book a one-on-one call with myself or Kyle. Thank you everyone for attending. And we look forward to speaking with you soon. Okay. Bye-bye.